Thank you very much, James. It's quite fitting, I think, that they put marketing right at the end because if you're a CEO, that's generally where you prioritize your IR spend. So yeah, I work with Stockhouse, and the one thing that CEOs are very happy to talk about is marketing, as long as it's associated with how to support your financings. So my team, my capital markets team, we create investor outreach programs for pubcos. We do also have a private placement portal, which we call the deal room. So there's two things I'm going to cover today. I'm going to give you, let's say as an aspiring CEO, going to go public, I want to put these online portals on your radar. And I'm also just going to go through the top 5 mistakes that we warn our IR partners about as we engage with them. So first thing, between crowdfunding and private placement portals, they're really gaining steam. And what's happened over the last couple of years, and especially in the US, is that regulators are making it easier for public companies to solicit investment. And so crowdfunding exemptions, like in the States, Regulation A, you can raise up to 50 million in the US now. In Canada, it's 1.5, but it's coming along. Obviously, investors over the last couple of years, increasingly going online to do their discovery, do their research. Obviously, online brokers have really changed the brokerage business. And if you look at the online tools that are available and the portals out there, their users really skew young. So as popular as this all is right now, it's going to become even more and more popular and widespread. So just to highlight, crowdfunding is only about 4 years old. And the wording here is explosive global growth. What you're seeing is 4 years ago, $2.7 billion raised in crowdfunding portals. Last year, it was $34 billion. And I think what's really telling, and it matters to us, is on the equity crowdfunding side. Last year, equity crowdfunding caught up with reward and donation crowdfunding. And they were the ones that really got it all started. So again, this is really gathering steam. So to your point, it's really interesting. I'm talking about the robot side of raising, but I will definitely bring it back to what you said about the relationships. Last January, or this past year, we opened up the Stockhouse deal room. And what it really is we've got 1 million unique investors on site. We never really had anything that addressed the accredited investors. That's really kind of the most popular exemption that public companies use to raise money. And so instead of going crowdfunding, we use private placement exemptions. So the exact same that Pubco uses to raise your money now. And what it means is that we're opening up our database and our online users as a new pool of funds for your raises. The way that it works, and so ours is just like any other crowdfunding. In the States, there's over 1,000 crowdfunding sites. But if you were to click on Control Energy, they're raising $5 million. Once you click on there, now you step through to the portal. And the portal is actually technology. So that's where, as an investor, you can manage your account just like a bank account. The portal is where you have all the information. So, and this isn't exclusive on the private placement side. So you could have a brokered financing where this just becomes, as the CEO wants to expand his own network, he engages a broker. You want to expand it even further, you go to a portal like this. But once you step off the website, that's where the investor can engage with all the information on the deal. And if they choose, they can look at the sub-agreements, they can sign them, they can submit them online. Every registered portal is going to have a licensed dealer attached to it. And so for us, it's an exempt market dealer. And what that means is on the back end, any of those subs that come in, all the compliance is handled right there by the platform. So it's all the KYC, KYP. And if you're a pubco, what you're going to get is all these filled-in agreements. They're going to be complete. They're going to be validated for investors. So that's great on the back end. This year we were 7 out of 7 for successful raises. The raises, I think, just average over $2 million each. And daily we put weekdays between 500 and 700 investors through these deals to actually view them. So if you're a CEO looking to do this possibly in the future, here's a couple of things to look out for. For any of these portals, success is going to mean that you have to choose a technology partner that works. Obviously, they've got to be compliant. The technology has to work. Just as important is that you have to have a critical mass of investors. And it's just like your book when when you're showing a deal to prospective investors. You got to have that critical mass. And that's why at Stockhouse we went down the path, because we have such a big community. The one thing that's interesting is that it really brings in a conversion component on the back end. Because right now what you're getting is a different flavor of investor that's seen your deal online, is interested, and they're either going to proceed all the way through just with this technology, or they're going to want to engage you. So a couple of things. If you're going with a private placement, this is incremental to what your current marketing plans are for your raise. So if you're going to get a broker, that's great. If you're trying to get to 2 million and you think you've got line of sight to 1.75, this is something that might get you that extra 100K. Nobody's going to rely on a private placement portal to do 100% of a big raise. That's just not going to work. But it definitely is going to augment your raising capacity. Due diligence doesn't go away. Now that you've got a portal, you're actually bringing somebody, so that deal actually has to meet DD to even get up there. And then past that, the one other thing that kills marketing people is any of the content. And on these, you can have your deck, your videos, any content that goes up there is also going to have to go through the compliance of the portal. What we've seen through our partners is really positive feedback from shareholders. And last year when we were canvassing people, some CEOs were hesitant to really go full bore marketing PPs. Something you kind of want to keep quiet, insider. But shareholders think this is a very progressive, this is using technology to make a company better. CEO, you could be talking to somebody on the phone, send them a link, they can actually fill in the documentation, submit it digitally while you're on the phone. It's a great sales enablement tool. But what you're going to get, and right now it's about a 20-to-1 split, is that you're going to raise money through these portals. Right now it's largely leads and introductions. Accredited investors, especially if you're using that, they're used to investing in a certain way, and you're talking about that relationship. Accredited, they're fine discovering something online, doing some research on it, but largely, really what we've seen, and our technology partners raised $5.5 million over the last couple of years, is almost 100% of the deals have involved a human interaction. And as a CEO, that means as you're prepping your team, if you're going to put a deal up on a portal, you've got to get your IR guys ready to take a different type of investor, and that's somebody who's not an insider, they haven't met in an event, this is somebody that's just got a sniff of somebody that interests them, and it's just a lot colder, so it's interesting. And definitely recommend create a marketing plan for every financing. This past year, we've learned that companies are really willing to get aggressive with their promotions. Big picture, marketing overall, and CEOs don't want to do this, but look at your milestones, your needs, and make a real plan. Like maybe that's going to include a portal, maybe not. But you got to look at what the next year's coming up and whether you got the marketing to support it. Next, you got to come up with a message. Clear and concise, I love it. It's got to be compelling, it's got to be simple, it's got to be continuous, consistent. But that messaging, especially when you're talking about online marketing, it cannot be confusing, and you've got to make sure that you differentiate yourself. Targeting, number one, be clear on who your prospective investors are, and then use that as a filter so that you look at your marketing plan, put it up against who you're trying to get, and just tell yourself, am I going to the right place? Is this the right message for them? And random acts of marketing, this is the difference between hit and miss, hoping that I get my one big article up on the one big day, versus continued exposure. And really what we recommend is lay your annual plan over your, how are you going to support that annual plan with regular activity? And then finally, obviously measuring. Companies have gotten a lot better in the last couple of years expecting ROI in their marketing. One of the challenges, though, is that set the goals for what you're trying to achieve. Like either trying to support, you've got paper-free trading in a couple months, you need to increase your shareholders, you've got that financing coming up. But there's different steps to get you to that point, and it's either web traffic, leads, making the phone ring. Be really clear what you're trying to accomplish, and then measure it. Track what you're doing, what you're paying for. If you're investing time or money, figure out what's most effective and continue with it. That's me.